Hello, everybody, and welcome to Trade Smart Tuesday. Now, today we are talking about the market traffic light system. Some of you may have already seen this before. Some of you might have come to know it and love it, especially if you are one of the members in our research program or in our group coaching program. You've seen this before. However, what I want to do here is give you this market traffic light system so that way you could go and use it yourself. One of the most important things that I learned soon after becoming an IBD meetup leader is I needed to understand how to read the market myself, right? Waiting for the paper to come out or waiting for some newsletter to come out, those things were good to get myself started. They were also good to shortcut some of the research, but they weren't good to get me to a point where I would be able to act like this. So if that's you, if you're someone that wants to be able to read and interpret the market data and be able to act on the fly, to be able to have confidence in how you're going to respond to the market, then this is for you. You're going to be able to take this and walk away with something that you could use. So, for those of you that are new here, thank you so much for being here. Make sure that you like and subscribe so that way you get more of this content. Also, make sure that you leave a comment. Let us know that you are alive. Let us know where you're from, and that'll help blast this out to a few more people here. Okay, all that said, let's jump into the content. So, first off, taking a look at this traffic light system. Now, what is this traffic light system? Why does it say market mood in the middle of it? Well, it's because the way that I look at this is that this is the mood of the market. Is the market in a mood where it's going to be running higher? Is it in a stable mood, or is it a mood where you're starting to consolidate and decline? Thus, the market's mood. And that's really one of the things that this helps with. One of the things that this helps me with is to know when to size up, when to size down, or to when to have a standard size. So that's what we'll be talking about today. How to do this and how you can use it too. As you have questions, as we're going through this, I want you to take plenty of notes. So make sure that you have your notepad, make sure that you have a pen, and type into the chat. Use the chat, ask lots of questions because the more engaged you are, the more the stuff is going to make sense and the more it's going to stick. So do me a favor right now and just comment yes into the chat or put a Y into the chat. Let me know that you're there. Let me know that you hear me and that you're alive and that you're engaged. All right, let's get into this. So general market, right? Get this banner up here so that way you know what we're talking about. How to analyze the general market. Regardless of whatever kind of system or strategy that you're trading, I trade stocks. We'll be using that as the example. But picture yourself as going to the grocery store, right? You're in the market for food. So you walk into the grocery store, how the shelves are stocked, if there's lots of stuff, if there's high quality stuff on the shelves, that's telling you something about the overall market environment. As you get into your car to go there, is it a nice sunny day? Is it raining cats and dogs out there? All of that is the general market. So when I go into stocks, the thing that's going to tell me if it's raining outside or if we're in the middle of a hailstorm or if it's a nice sunny day, good for a drive, is taking a look at the following. First thing that I'll take a look at are the major indexes. And I have 5 major indexes up here. I like to look at the S&P 500, the NASDAQ, the Russell 2000, the New York Stock Exchange, the Dow, and I also like to keep the IBD 50 up. The reason why I like to look at the IBD 50 is because it, in general, it's a fair representation of the types of stocks that I like to trade. I like to trade growth stocks. I like to trade momentum, and the IBD 50 does a fairly good job at capturing that. So, what do I do with this? I look at which way it's going. I look at, is this moving up? Or is each index moving up? Is it moving down? Is it moving sideways? And the way that I do that is pretty darn simple. It's taking a look at the trend. Taking a look at the trend. How is price behaving both uh, from a longer term basis? So if you're looking from the left of the chart to the right of the chart, is price trending up? Which way are the moving averages moving? Right? Each one of these are moving averages. So this is a 5 EMA, that thin gray line. The green one is a 10 EMA. The purple is a 21 EMA. The red is a 50 SMA. So are these pointing up? Well, guess what? We're in an uptrend. Is price above each one of them? Yes. Well, guess what? Price is in a fairly strong uptrend. Price might even be getting a little bit extended. That's how I know that the NASDAQ is in an uptrend. It's how I know that the S&P 500 is in an uptrend. It's also how I know that the Russell 2000 is moving sideways. Right now, it's below that red line. What was that? That's the 50-day moving average. It's also below all the short-term moving averages, but it's above this orange one, that thin orange one that I didn't mention before. That's the 100 EMA. So if it's getting sandwiched, that's something that's telling me, okay, the Russell 2000 is moving sideways and it's in this chop zone, right? Because all this stuff acts as support and resistance. What's support and resistance? It's the floor and it's the ceiling. So picture this, like picture yourself in a fun house, right? And so you're in this fun house and you have your floor and your ceiling and it's getting narrower and narrower and narrower, almost like you're Willy Wonka going to turn that key, right? And on the other side, when Willy Wonka opens that door, you're either going to have a nice big expansion where maybe price breaks out, or you could fall right through the floor. And hopefully part of what we'll get to today as well will be, well, how do you know which way you're more likely to go? But for right now, let's continue with a discussion of general market. So analyze each one of these indexes to see which way are they moving, up, down, or sideways. And if they're all moving in the same direction, guess what? You've got a nice strong trend. If they're not moving in the same direction, like you have right here, right? You have the S&P 500 and the NASDAQ moving up. You have the Russell 2000, the New York Stock Exchange, and the Dow. They're all moving sideways. So what happens then? Well, picture it like a tug of war, right? You have the S&P 500 and the NASDAQ, they're moving up. The other ones, they're moving sideways. So what do you think is going to happen to stocks? Well, some stocks will move. Other stocks will flounder. That's exactly what we're seeing here. But that's not the only thing that we want to analyze, right? Because there's other quadrants to the market mood. And we still have to get to your system and we still have to get to personal performance, because all those things will be very important. They'll give you great insights. But everything that we've spoken about so far, you could get to a point where you just glance at this and you know, right? Well, wouldn't that be great? Wouldn't that be a lot better than signing up for all these services or listening to what somebody says on Twitter or tuning into the news? Just being able to look at this and have a solid idea of, okay, here's what's happening and here's what I need to do? I hope so. Because when I experienced this way back when, it was a light bulb movement. It was an epiphany. So I'll look at these charts on daily time frames, I'll look at them on weekly time frames, and I'll look at them on monthly time frames. And I'm basically looking for the same thing. Are they moving up, down, or sideways? And when the different time frames start to move in different directions, because sometimes you'll start to see the smallest of changes down on the daily time frames, but then you zoom out to a weekly or a monthly, and it's just like everything's fine. So that starts to give you a sense of, okay, are we in a major turn or a minor turn? That's very important, especially depending uh, on your style, right? So let's say you're like me. Let's say that you're a swing trader, which means that you typically hold your winning trades for about a month, right? And it's not because they can't go further, it's because you want to make your money and get out and then recycle it into the next winner. Let's say that that's your style. Well, knowing how the monthly charts and the weekly charts are doing will help you to better navigate the daily trends. Because when price starts to pull back, you could see, is this a normal pullback? Is it likely to get a bounce because it's within a much broader uptrend? Or is it a lot closer to a top? All that can be discovered right here on these charts. Now, I'll pause for a moment because I want to grab a sip of water. Put your questions into the chat if you have any questions so far. Now, there's two other things that I want to mention on the for the general market before we move on to your system. Let's see. Do you consider yourself reactive or a dictionary? I'm going to assume that you meant discretionary trader, but that's pretty good. That's pretty good. Good for a laugh. Well, we need more laughter. I consider myself to be rules based, uh, discretionary. So the reason why is because I have a trading plan, and I don't just have a trading plan. I have a business plan for my trading. So what does that mean? That means that everything is guided by a set of rules, a set of guidelines, a set of principles. Everything from what trades I'm going to take to how I'm going to analyze the general market to how I'm going to size, right? To even which brokers I'm going to use and the backup plans for if something goes awry. All that stuff needs to be planned out long in advance. So, um, hopefully, Khalid, that answers your question. But everybody, keep on posting your questions into the chat. This is very good. All right. Other two things that I consider for the general market is this down here. This is telling me the number of stocks making new highs versus new lows on the NASDAQ every single day. I take a look at this one, and I also take a look at it on the New York Stock Exchange. The reason why those two is because those are the two that I have. And it's robust enough. It also is what I was taught way back when I was working well with IBD and the IBD meetup program. This makes a lot of sense, and I'll tell you why. If the index is going to continue to make new highs after new highs after new highs, wouldn't it also stand to reason that the stocks within it would also be making new highs after new highs after new highs? What's driving the index? It's the stocks within them. So if the stocks within them stop making new 52-week highs after new high after new high, how is it going to be able to continue making new highs? Sure, it might be able to do it for a little while because of they're weighted differently. Each stock is weighted differently within the index, but it's not going to be able to do it forever. So when I see action like the kind of action we've been seeing lately. It's even more pronounced on the Nasdaq. So I'll flip back to the Nasdaq. When I see this, right? This is more stocks making new lows than new highs, right? Well, we've seen that going back to the end of May. And what's happened since the end of May? What happened since the end of May has been a 10% move on the Nasdaq. So that's great. We could still participate. I'm not saying that we shouldn't, but should we be aggressive here? This has been one of the early warning signals of a market that's either going to be choppy or going to get ready to consolidate. The reason why it could be either or and why you want to be conservative in sizing in both is because in both scenarios, picking individual stocks is going to be more challenging. Because even though the index itself is moving higher, the individual stocks are going to be more hit or miss. I had a phenomenal June. Right, June was my best month of the year. My average gain per trade was 12%. My average loss per trade was only 2%. This choppiness makes it difficult to replicate all the time. So that's why, even though I'm coming off a fantastic month, I still want to be conservative in sizing because of this, right? New highs versus new lows. It tends to be one of the canaries in the coal mine that tells us how things are, if things are easy or not. And it's one of the key elements that I look for the general market. And I'll also mention too, the reason why I like to have this three-dimensional look into the market is so that way I have a holistic picture and I'm not overly pulled in one direction or another. Right? I could look at if I were only looking at the Nasdaq, let's say, uh, I would be extremely bullish. But there's other things that are going on, right? Well, what about the stocks? Well, what about your personal performance? Well, what about the other indexes? It's good to have a holistic picture. It's also very good to define what it is that we're going to analyze, because if we don't have a clear definition of what we're going to analyze, then anything could be thrown into the pot. That's what happens to a lot of people. A lot of people don't define what it is that they're going to consider, and therefore they get pulled in so many different directions, and they end up being like a deer caught in the headlights. It's not a good feeling. Trust me, I've been there in the past. Let's move on. So, the next thing is your system. We're talking about this section right here, your system. How to analyze your system. What is your system? I consider your system to be your edge, the thing that tells you which stocks you're going to trade. So let's say that you're somebody that's brand new to the market and you don't really have an edge, or you don't think that you have an edge. So you hear me talking about some stock, you're like, hey, he has a lot of experience. Let me go put some money into this. Well, guess what? That's your system. Idea comes across your desk, you take action on it. That's your system. Is it a good system? No. But that would be your system. When you have a good system, that system can give you great insight into the general health of the market, especially when you're disciplined about your system. So, let me tell you a little bit about my system. I trade growth stocks, as I mentioned before. The system that I trade is rooted in CanSlim. So, for those of you that are familiar with William O'Neill and the book How to Make Money in Stocks, you'll be familiar with the general way that I trade. And I was also, like I mentioned before, an Investors Business Daily meetup leader for many years. If you're familiar with Mark Minervini and the types of stocks that he looks at and how he trades, we're all trading the same kind of stuff. So even though with the Trader Lion crew, where we're all trading the same kinds of stocks. So what I'll do, I'll filter the market, right? I'll take all 10,000 stocks and I'll whittle them down into just a handful. The handful that I'm looking at is roughly 350 stocks that pass my fundamentally base screen. So I'm screening for earnings, I'm screening for sales. I like to have sales and earnings each be 25% or more quarter over quarter. Yes, I'll trade some stocks so those are some screens that I'll run. Then I'll have other screens for different things like relative strength or a high industry group rank, and I'll run all these different screens and I'll filter them, and I come up with this list that I call a universe list. Then I'll go through that list, that universe list, and I'll take a look at it and I'll see, well, how many of these stocks are setting up? How many of them are setting up in certain base patterns that I'm going to trade, right? So I'm not just looking for any old setup, any kind of setup. It's just like, oh, well, look, price is up today. No, that's not that's not good enough. I'm looking for a handful of patterns. We've mentioned these patterns a couple of times uh, in other other places, but I'll bring up my spreadsheet here and I'll show you a few of the patterns that I like to trade. Right, so these are the patterns here that I like to trade. I have this whole spreadsheet with a model book that tells you, okay, these are the types of setups that I like to trade. Here's how I define them. Here's what takes them from good to great, and here's a few models of those. So let's just click on, I don't know, click on this one here. Right, so this was Solar Edge. This was setting up in a cup with handle pattern. This is one that I traded and how I traded it. And it's part of my model book. So the reason why I want to have all this clearly defined is so that way, when I find another one of these patterns, I could say, does this look like the model? Yes or no? And then from there, make a decision. Do I want to trade this? Great. So I'll go through my whole universe list, right? So I have this whole universe list. Let's pull up the universe list. So I take the universe list. I'm using Market Surge. I'm really looking at Deep View quite a bit, and I'm liking what I'm seeing in Deep View a lot. So shout out to those guys. But I took this list from Market Surge and I exported it to the spreadsheet, 350 names. Then I take that and I filter it down into everything that is setting up for the week. And you might notice that there's a few of them that are 3, 4, and 5 gut feel. Now, well, what does that mean? When I'm eyeballing a chart, right? I've been trading now for 25 years. So when I look at a chart, I'll have a feeling right away of, do I want to do more work on this or not? And for the ones that I do want to do more work on, those are 5s. When something is on the fence, it's a 4. If I find a setup that has a whole bunch of flaws, then it's 3. Now you might be asking yourself, well, Mike, well, why bother tracking all this? Right? Well, why not just track the ones that you would want to trade? Because it affects your system. It affects the system. So if there's stocks that are setting up, I not only want to use it as a shopping list, I want to use it as a market health list, because how the list as a whole performs is going to tell me a whole lot about how the market is treating the types of stocks that I'm interested in. If I have a whole laundry list of stocks and they're all taken off, then guess what? The market is telling me that it's time for me to go shopping. But if I have this list of setups, let's say a handful are okay, most of them are pretty mediocre and the market flushes them, then that's telling me something else about the market. It's telling me, whoa, you don't want to be putting money in right now, or you at least don't want to be going in heavy right now. That's what your system can tell you. And one of the best things that I like about this is that I don't need to wait for anybody or anything to tell me what to do. I could just go in to my platform. I could go take a look at the stocks, see what they're doing, and I already know. That's how I keep my finger on the pulse of the market at all times. That's how you could keep your finger on the pulse of the market at all times. Right? Well, if I could do this, if I'm able to do this, you're able to do this. This is what I was doing back in 2010, 2011, when I first learned. I was doing this while I was working full time, day job, 9 to 5, 9 to 6, doing this at night on weekends. If I was able to do it then, you're able to do it now. The technology has only gotten better. So that's what your system can tell you. Any questions on that so far? All right, let's keep it moving then. And as we're going to, just put your questions into the chat, and if we get to them right away, we do. If not, we'll have some time at the end for additional Q&A. But let's keep it going. All righty. So how to analyze your personal performance, right? So it goes deeper than just taking a look at your P&L and saying, okay, I'm up a few hundred, I'm up a few thousand on the day, or I lost a couple $100 today. It goes a lot deeper than that. What you want to be able to do with your personal performance, and this also, once you have your system in place, right? So once you're disciplined, because if you're just trading all willy-nilly, then this isn't going to work for you, right? Like if you're just taking the random trades, well, that's not going to give you a whole lot of insight into the market's performance. But if you're very disciplined about how you trade and the types of setups that you take, then that's going to give you a whole lot of insight, right? Because if you have a system where you are going to look at a specific group of stocks that fit certain criteria, and you're only going to trade them when they have a certain type of setup, and you have a mechanism to find at least what you perceive to be the best of the best, then your personal performance is going to tell you a lot, because you've selected, at least at the time, what you thought was the best of the best. So how the market treats those has some implications for you, doesn't it? It's going to imply, should you be betting heavy or should you not? Is it time to scale up or is it time to scale down? Should you be taking your gains faster or slower? That's what this whole thing here can do for you. And it's why I wrote about it in my book, The Trading Mind Wheel, that you could go get over on Amazon. Shameless plug. But we've got to do these things. Last month, I told you guys that it was the best trading month that I've had for the year. Right now, I'm scrolling through this fairly quick. Right now, I've had a couple of losses in a row. So what does that tell me? That tells me that I should be sizing down. I should be continuing to size down. And thankfully, right? Thankfully, I have this mechanism here to analyze the market mood that told me in advance that I should be sizing down, right? Because the general market's been kind of wacky. The number of new highs have not outpaced the number of new lows, right? Well, we saw that earlier. We saw that with this, right? NASDAQ's moving higher. The number of new highs versus new lows is all over the place. So that tells me, hey, You should size down. Things aren't quite right for your system. Great. So I do that coming off of the best month of the year, and then when I have a couple of losses, right, like this one here, it doesn't hurt that bad. And the reason why it doesn't hurt that bad is because I already knew how to size. And the reason why I knew how to size is because of this. Hopefully, this makes sense to you guys. I want to hear your questions. I want to hear your thoughts. In a nutshell, this is the thing that helped me do what I'm doing right now. That helped me to successfully manage my own accounts for about a decade, more than a decade now. To be able to leave the day job behind to do this. This is very important. When you have this, you're able to analyze the market. You're able to have deep insights into how much you should be buying, when you should be buying, what you should be buying, when you should be selling. And you don't need to wait for anybody else to tell you what to do. So I'll open it up for some Q&A. For those of you that are not yet on our newsletter, what are you waiting for? Well, we have a free newsletter that goes out almost every day. You could get that newsletter over at marrowwealth.com/newsletter. And like I mentioned before, make sure that you like and subscribe to the channel. So let me know what questions you guys have, and I'll leave the newsletter there. So that way you could get on there. Khalid, you're welcome, buddy. You are welcome. I'm glad that you found this so valuable. Got a lot of people. I'm able to see the stats for who's watching where. We're broadcasting this to Facebook, LinkedIn, YouTube, Twitch, and X. We have just a small handful of people watching over on YouTube, but we've got 69 people watching over on X, and everybody is super quiet. It's always crickets over there. But I still love you guys anyway. Any other questions before I hop off? No, we're all good? All right, then tomorrow we have our midweek update. The midweek update is at what time? It's at 11 a.m. Eastern Standard Time. So make sure that you tune in for that. And let's see, there's one other thing that came in from Khalid. Let's see. Have you been in a situation where you jump from system to system, and how did you stop it? Yeah. Yeah, you just described my first 10 years of trading. The way that I stopped it really was by God's grace. Right? My first experience with the market, I didn't even know how or where to find or trade stocks. So I went to my local bank of all places. So I walk into the local bank and I tell them that I want to trade stocks. They hand me this giant pile of mutual funds and they tell me, go and put your money into some of this. You don't really have any business trading stocks. And to some degree, they were right. Didn't really know anything. I probably would have lost all my money. So handing it over to the professionals made sense. I had loads of diversification because of the mutual funds, and I was putting my money in there for uh, planning to have it there until I graduated college. This was going back to 1999, and I was going to graduate in 2002. So I had everything on my side, right? Time, the pros managing it for me, plenty of diversification. Well, guess what happened? I put my money in, and when I graduated in 2002, I had 20% less than what I had handed them. And I'm like, what just happened, right? The pros didn't work. So later on, I discovered this guy, bombastic guy on, I think it was NBC, Jim Cramer. Maybe you heard of that name. And he said at the time seemed to make a lot of sense in a variety of ways. And so I started to follow his style and had some mixed results. And I eventually blew up my account because part of his style is if you like the story of a company and it drops and the story hasn't changed, then you should buy more of it because this is the market's throwing you a sale. I believe that, and I ended up losing because of it. So I those are two major hops. Then eventually, uh, by the grace of God, my coworker at 2010, I'm a middle manager at this point, and he comes to me and he's like, "Yeah, I used to trade for a living. I decided to not trade for a living anymore, but now I wanted something a little bit less stressful. So, but you're young, you should start looking at the market." And I told him, "Whoa, whoa, 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 wait, hold on just a minute there." And I told him my tale of woe, and he said, "Well, why don't you give these books a shot and see if you like them?" So he hands me Martin Zweig's book. I forget the title of it. Fantastic book, Martin Zweig. And he also handed me William O'Neill's book, How to Make Money in Stocks. I read those. I fell in love with O'Neill's work. It just made sense. He had a historical perspective on the market. He wanted to see, well, there's certain stocks that he's been studying that have gone up 100% or more in a fairly short period of time, like a year or two. Well, did those have any common things among them? And so he found that, yeah, actually they did. Far and away, they had great earnings, great sales, they had growth, they had something new happening with the company. They were typically the leaders in their industry group, and they came up with this whole list of what would generally lead to those stocks. And then he found the types of patterns that they would form before they made their big moves. Great. So you don't have to catch all 100%, but even if you catch 70%, or even if you catch 30% of something that's moving, isn't that good? And then you could wash, rinse, and repeat. So he did that. So I studied that. And then I started to find out about his newspaper, Investors Business Daily. Then I found that they had meetups all across the country. So I went to my local one in New York City, got in with those guys, started to learn a lot from them. And then within the span of a year of finding the IBD meetup group, I went from being inconsistent to being profitable. So hopefully, Khalid, this is your moment where you find something that makes sense and you could stop the system hop because uh, the way to like many, I think that many of these things work. It's a matter of figuring out for us. Well, what works and what am I able to trade, and also one other thing, what matches my goals, right? So if you're somebody that likes to be active, then something where you're very passive isn't going to work for you. If you're somebody that likes to see your portfolio increase, right? Let's say that you, but you don't like drawdowns, then that's another criteria for you, right? Maybe you need to be a little bit more conservative. Maybe you need to have a little bit more turnover in your portfolio. Go for more base hits versus buying something, writing it up, and then giving back a lot of those gains, because sometimes that's what happens when you're more intermediate term or when you're longer term. You have to be able to weather the storm of stocks pulling back. For me, I don't like giving back money, so that's why I'm more active. Right? That's why, like last month, well, when I was in Nvidia, right? I bought Nvidia here. I sold it a few times on the way up, and now it's consolidating. I'm not in this right now. Some longer term players might be, but I'll take a 50% gain. That's fine. I want it to be set up properly, manage my risk, and then exit if something happens. Because when price is up here, you don't know how far price is going to fall. At this point, it dropped 16%. You don't know if it's going to rally back. It could have tested the 50-day moving average and given back another 25%. But what's right for me is right because I've defined my system and I've defined the rules of the system. That's one of the things, Khalid, that uh, when we're building a system, well, we need to define it. The system needs to work. We need to be able to adhere to the rules. The way that we adhere to the rules is by believing in the system. And how do we believe in the system? The way that we believe in the system is by seeing actual results. You could get actual results either by trading it yourself, back testing it yourself, seeing other people's work, ideally all three. I talk about all the stuff in my book, the Trading Mind Wheel. Again, get that on Amazon. Anyhow, we're about 10 minutes over, so we'll wrap things up here. I want to say thank you all so much for joining me today. It's been great. It's always great. Make sure that you subscribe to the Mara Wealth newsletter, marawealth.com/newsletter. Make sure that you like and subscribe to the channel. We'll be back here tomorrow at 11 a.m. Eastern Standard Time for the midweek update. Until then, have a wonderful evening. Take care. Much love. God bless.